And welcome back to Broader Financial Future, to all my future billionaires and millionaires out there. Hopefully, the stock market is treating you well with its ups and downs, but it's all to the good. Today, I'm going to talk about a high yield utility stock with a 5.53% dividend yield. So, before we get started, make sure to hit that subscribe button if you're new to the channel, and to everybody returning back, thank you for watching. And don't forget to smash that like button as well. It's very important in helping this community grow. I talk about dividend stocks, index funds, ETFs, you name it, and more. But enough about the sales pitch. It's all about PPL Corporation, ticker PPL. Now, let me tell you a little bit about this company. This company is in utility space. It owns and operates four high-performing, award-winning utilities, serving more than 2.5 million customers within the US. So when you're buying PPL Corporation, that's what you're basically getting. And this company is in the utility space. So that's another reason why it has such a great dividend yield as well. It has a market cap of 22 billion with a forward PE of 18.52. It's not too bad there. So that's what you're getting when it comes to PPL. Now let's look at some of these numbers here. Their payout ratio for the trailing 12 months is 146.9%, which is pretty high in my book. Their dividend growth rate for the past 3 years is 1.22%. I would like to see something a little more meaty, but growth is growth. The 5-year growth is better at 9.21%, and their 10-year growth is 18.57%. But really, if you look at the last 3 years, it makes sense if you look at their payout ratio, why the growth of the dividend hasn't grown so much. But their forward PE, their forward actual payout ratio looks to drop to 92.76%. Still on a high end, but it's in the utility space. So you probably want to see a lot of growth moving forward, especially since it already has a high dividend yield for this particular company. Now, some of the other numbers I like to look at is 50-day moving average. Because if it's a company I want to buy into, I want to see what was the average for the last 50 days. In this case, it's $28.63. And what was the average for what is the 52-week high, right? Because it's 52-week high, which is $33.35. I don't want to. I personally don't like to buy a stock at its 52-week high. Currently, it's trading below its 52-week high and slightly above its 50-day moving average, around $29. But for me, the only time I buy a company at its 52-week high, if it's a company I believe it's going to skyrocket up, a company like PPL, I like to get it below that 52-week high mark, closer to its 50-day moving average or lower. All right, so let's look at the couple of charts here. If you can see, the past 5 years, PPL is down about 12%, but within the last year, you can kind of see an upward trend at about 6.54%, and in the last 3 months, it's up 4.8%. Now, keep in mind, this is a company I do own. I am buying more into it, more so for the cash flow, not necessarily for any other reasons, but really the cash flow that I'm looking to get. So like I said, I own the stock. I think the price is decent at 29.97%, 29.97 cents, which is basically almost a 10% discount from its 52-week high. Um, it's trading below its Yahoo price target. That's what we believe in that at $21.73. So there is upside potential when it comes to the growth of this particular stock. And with a high dividend yield is one I continue to watch for buying opportunities. I have recently bought a few more shares of this stock. I like it under 30, preferably around the $20 range. I probably won't buy too much more in the near future, especially as the stock continues to climb up in value, um, because there are some problems with the payout ratio for the dividend. But overall, um, I think this stock is a decent stock at its current price. So I am getting tongue tied right there. So basically, like I said, I recently bought a few shares of the stock. I like it under $30, 20 range. More so, I think it's a better deal. I am cautious since the payout ratio is high. Their operation cash flow is down from 2018. So those are some things I'm concerned about. But overall, I think it's fair, a fair price. But make sure to subscribe, like, and comment. Let me know if you own this particular stock. Check out the links in the description to help out the channel. And like always, this video is strictly for entertainment purposes only. I'm not a financial advisor, and any investment may involve risks. So it's important that you do your own homework because at the end of the day, it's your money. You have to know what you believe in, right? Because I look at it like this: whenever you're investing into a company, you're becoming a part owner in that company. Is it something that you believe in? Because if you don't believe in it, if it goes up or down, you could make the wrong move. So always make sure you know what you're investing in, because at the end of the day, money don't grow on trees like they say. But anyway, I'm out. Enough of me talking. Until next time, peace.